So if you've already got a really good financial and investment plan in place, and you're pretty confident you've got enough money for the rest of your life, your attention may turn towards gifting some of your money away, potentially to your children, in order to avoid inheritance tax on your death. Now, inheritance tax is definitely something you need to be aware of and know about, because over certain allowances, potentially nearly 50% of your wealth could be lost to this tax charge. And by gifting the money away whilst you're still alive, not only do you get the benefit of seeing people like your children enjoy your wealth, it also keeps more of your wealth within the family rather than going towards the taxman. Now, in this video, not only am I going to show you a gifting strategy that potentially saves inheritance tax, it also allows you to make much further tax savings as well, possibly even around 90% in tax savings by using this strategy. I'm Carl Roberts, Chartered Financial Planner at RTS Financial Planning. So many of you will be aware that if you're going to gift money away to avoid inheritance tax, you need to survive 7 years after making the gift in order for it to ensure it's outside of your estate and qualifies as being inheritance tax free. In fact, there's actually a thing called a gifting allowance that allows you to give away £3,000 every year without having to worry about surviving 7 years. But any larger gifts above this amount does mean you need to survive 7 years to avoid inheritance tax. But not only do you need to survive 7 years if you're making a larger gift, it might not be appropriate for you to be giving away such a large sum of money to your child at this stage. Perhaps they're still fairly young, maybe they're just starting their first job, starting new relationships. They may not be responsible enough yet to look after such a large sum of money. So rather than giving the money away to them directly, why not consider contributing to their pension? Now, it doesn't matter if they don't have a pension set up yet. Anybody can have a pension whatever age you are, and you can set this pension up for them and pay into it for them. They might already have a pension through their job, so you could contribute to that pension, but you might want to keep it separate and see what you're actually giving away into their pension. The beauty of this strategy is that not only do you avoid 40% inheritance tax on the gift you make into the pension, providing you survive 7 years, your child could actually receive basic rate income tax relief as well. And if they're a higher rate taxpayer, they can claim back further income tax relief. So in that scenario, there's potentially up to 90% in tax savings just by you making a gift into their pension. Let's look at that in a little example. Chris and Julia have a total wealth in excess of 2 million. And all of their spending is covered by their pension income, so they're keen to pass some of their wealth onto their children to avoid inheritance tax. So what they do is they make an £8,000 gift to their daughter Kelly's pension. Now what will happen is the pension provider will automatically apply basic rate tax relief, and this means they'll top up the pension contribution to £10,000. So £10,000 will sit inside Kelly's pension. But remember, Chris and Julie have only gifted £8,000. As Kelly is a higher rate taxpayer, she will also be able to claim a further £2,000 in income tax relief. So if we look at the total tax savings, providing Chris and Julie survive 7 years, there's the inheritance tax saved at 40% of £8,000. So the inheritance tax saving is £3,200. There's the basic rate income tax relief that the pension providers topped up the contribution by. That's £2,000. And then there's the higher rate tax relief that Kelly can claim, which is a further £2,000. So the total tax savings are £7,200, which is 90% of the original £8,000 gift. So let's get into the nitty-gritty of how this pension gifting strategy works. As mentioned earlier, you can gift money into your child's pension at any age. So this gifting strategy even works for newborn grandchildren, for example. In terms of how much you can gift to your child or grandchild's pension, it will all depend on how much they earn. Now, clearly, if your child is very young or you've got newborn grandchildren, they're not going to be earning anything. But you can still contribute up to £2,880 per tax year into a person's pension, even if they're not earning. And not only will you still get the inheritance tax benefit of that if you survive 7 years, your child or grandchild will still get basic rate income tax relief topping up that pension contribution. So there's still a ton of tax savings even at that low amount. If your child is earning and you're able to contribute more, you can actually contribute up to 100% of their gross salary, or £40,000 per year, whichever is lower. You need to be careful, make sure if you are going to go to those maximum limits, you deduct any contributions the child is already making or their employer is making for them. Now, another big benefit of this gifting strategy, particularly if you're one of those people concerned about your child having too much money too young, is that because the money is going into a pension, they can't actually access this money until they reach pension age, which at the minimum is going to be age 55, moving towards age 57. So it's a great way of ensuring they don't have access to this money until they're much more responsible. And in fact, you're actually helping them with their retirement fund already. Now, if you're a bit concerned of your child having to wait till pension age to actually get the benefit of your gift, then don't worry, because actually they will receive some benefit straight away, potentially. If we look at the example earlier of Kelly, who's a higher rate taxpayer, although she can't access the gift until pension age, so maybe 55 or 57, she does get an increase in her salary effectively by reclaiming that higher rate tax relief. So she gets an extra £2,000 a year just because you've made a gift into her pension. And in fact, she could get even more tax savings if she contributes pensions via her salary and does salary sacrifice, because she'll save national insurance contributions as well. So her net pay will increase even further because you've paid into her pension. Now, essentially, there's two ways you can do this gifting strategy. Way one is that you set the pension up and you pay directly into the pension on behalf of your child or grandchild. Or option two is that your child increases their own pension contributions via their salary into the company workplace pension scheme, and you subsidise their income by paying the gift directly to them. Either way, this both achieves the same objective of that inheritance tax saving, providing you survive 7 years, and also all that income tax savings as well. So hopefully you see gifting into a pension is a really good gifting strategy. It ticks a lot of the boxes. If you want further information on this or any information on retirement planning, investment advice, please don't hesitate to get in touch. We offer a free 15-minute consultation so we can get to know each other and find out if we can help you. Also, don't forget to subscribe to this YouTube channel because I will be updating videos and providing more in the near future. Till next time, take care.